What's going on, guys? Welcome back to the channel. My name is Sal. I am a dividend growth investor, and if this is your first time here, I'd like to welcome you and thank you so much for taking time out of your day and stopping by our channel. If you are new and you like what you hear, like what you see, I would so appreciate it if you left us a thumbs up, give us a like. It really helps out the channel, helps the growth, and makes you a really good person. If you do like what you see and you hear, I would love it if you would subscribe, come back for more information. We are doing videos at least twice a week. And sometimes life gets in the way and we'll do at least one video. Something that I have failed to mention in the past, but I do leave a link in the description. If you want to follow more of our homesteading stuff, we do that on our Instagram page. So if you want to check us out on Instagram, there's a link in the description. We got a lot to cover today. So we're going to be going over some news, some personal news, and then our portfolio review for the week. Thanks again so much for joining us. We're going to jump right into the news, and then I've got something to share with you guys, and with our portfolio update, you can already see on the day it's going up, and we're going to look at why that's happening. So there's been a lot of talk over the last few weeks and over the summer, a lot of financial channels talking about the recession, the trade wars with China, and just today there's been a lot of good news, a lot of rallying over the last 24 hours. So we can see here a couple headlines that the Dow has jumped 300 points after China and US agree to trade talks next month. So there's a lot of optimism that's happening. There's supposed to be another sit down between the US and China to make sure that these tariffs are no longer going to be a threat to either economy. We can see here that the Dow Jones has jumped 270 points or 1%, and the S&P 500 has climbed around 0.8%. I'm going to leave a link in the description to all the articles that we're talking about. So if you're interested in reading all of them, I would encourage you to go through there and just see what's happening today in the news. We can also see now that the markets have opened. This was a pre-market headline, and we'll take a look at my portfolio here in just a second. But pre-market was pretty good. It was up about $19 at one point. Then it obviously started to drop down as the markets opened. But we can see here that markets are making the biggest moves in the pre-market. A couple companies here that they go through and analyze. Slack, I got a lot of email alerts and headline alerts on Slack. If you're not familiar with Slack, is a great office tool. I use it personally for my business, for communicating, and also for collaboration on projects. It's a great project management tool if you've never heard of it. And here's another headline from CNN Business. Stocks are headed for another day of gains after the US and China say that they will resume trade talks. So this one also talks about the fact that they are going to be having trade talks next month in October, and it's up about 1% and 0.9% in this particular article. So in other good news as it relates to the market and how things are happening across the world, this was a CNBC article that talked about private payroll growth way above Wall Street estimates despite recession fears. So I'm not going to sit here and talk about, the sky is not falling, the sky is falling. I'm just going with what the headlines are putting out there, reporting them to you guys. I don't necessarily use these headlines as a way for me to measure what I'm doing in my portfolio. Again, as a dividend growth investor, these headlines are more just a pulse of what's happening in the markets, what's happening in the world. But as dividend investors, we should be looking more at the dividend growth, the history of that particular company, and their overall growth strategy for their investors. So whether or not the stock plummets or takes a little bit of a nosedive, as long as the dividend stays strong, I'm not really going to be paying attention to much of these headlines. But we can see here that private payrolls have grown in August versus any estimates that the Dow Jones has come out of, and it's jumped amid heightened fears that the U.S. economy could slip into a recession. So Joseph Carlson did a really good analysis about the dividend yield curve and what that means in triggers for a recession. And he talked a lot about the employment stats and how there is a correlation between unemployment and recessions. So go ahead and check out that video if you haven't already. I'll leave a link in the description below. And before we get into our portfolio update, I want to play you guys a short little clip. It's from a little independent movie. You may have heard of it. It's called Avengers Endgame.
We lost friends. We lost family. We lost a part of ourselves. Today we have a chance to take it all back. You know your teams, you know your missions. Get the stones, get them back. One round trip each. No mistakes, no do-overs. Most of us are going somewhere we know. That doesn't mean we should know what to expect. Be careful. Look out for each other. This is the fight of our lives. And we're gonna win. Whatever it takes. Good luck.
Man, that was just a riveting speech. I absolutely love that particular scene in Endgame. It really is motivational, and it really corresponds with what I wanted to talk to you guys about today. Some personal news. One of the key takeaways from that particular speech is whatever it takes. In that, he talks about we've lost friends, we've lost family, but we're going to do whatever it takes because we're in the fight of our lives. And when I talk about that, it sounds a little dramatic, but when you're in debt, you really are declaring war against the debt that you have taken out. And you are setting yourself up for a financial plan that in 5 to 7 years, you have the potential to be out of debt, debt-free, and financially independent through paying off your debts and also investing and saving and building a legacy for yourself. If you're interested in more about what that actually takes and what that means, I have links in the description below for DaniJohnson.com and the True Wealth Formula. It really did transform our lives, and we've set up our budgets and we've set up an investing plan and we've set up a war on debt strategy so that we can be debt free in the next 5 to 7 years. So with that, I wanted to share with you guys some exciting news. I am a business owner by trade. I design websites and marketing, digital consulting, but I decided that I needed to get a second job. I wanted to get a second job so that I can focus my normal income on our living expenses, the 70-10-10-10 breakdown that I've talked about in the past, but then I wanted to get some extra income that I can solely dedicate to paying off debt. And that is going to take us from the 5 to 7 year range to maybe the 3 to 5 year range. I just wanted to report with you guys, I got a second job. So the videos may be 1 a week instead of 2 a week. It's just going to depend on my schedule and my availability, but I want to keep doing these. I'm so encouraged by the comments and the interaction that we've been getting over the last few weeks. So thank you again so much. Whatever it takes, guys. If you are willing and you are hungry and you want to get out of debt, do whatever it takes. And I know getting a second job isn't necessarily this big transformative decision. I know people that have 2, 3, sometimes 4 jobs, and they're still struggling. And I get that. But when you go through the creating a dynasty and the first steps to success, you will see what you need in terms of tools and mindset to get yourself out of that situation. So again, I would highly encourage you guys to check it out. Please look at the links in the description below if you're interested in more of that. And without further ado, we are in our Robinhood portfolio, checking out the day, week, month, and overall. On the day, as I mentioned, pre-market, we were up about $7 around 9 a.m. Eastern, and then it dropped off right when markets opened, and we are now up $8.14 or 0.76 as it's changing. And here we can see on the week, we are back up $15.13 or 1.4%. And then we can take a look at the month, and we are up $11 or 1% as well. And we can see the volatility that's happened over the last few weeks with the trade wars and the recession fears. It'll go up and just nosedive, and it'll come back up, and the markets are just throwing tantrums all over the place. But I'm hoping with the news of the conversations that the US and China are going to have, that stocks are really going to take a nice recovery. And since we have been investing since June of 2019, we're just going to take a look at the overall last 3 or 4 months, which we can see we are up $50 or 4.9%. I'm pretty happy with that. 4% seems to be a really good return. I'd love to get it a little bit higher, but I'm not going to get greedy. I also wanted to share with you guys the new dividend spreadsheet that Andre Gic put out there. It is absolutely awesome. I am so happy with this particular spreadsheet that he put together. So big shout out, big kudos to Andre on that. This does replace the numbers application. So now everything is in the cloud. I don't have to switch windows. I can just go directly to this spreadsheet and take a look at where everything is sitting. And we can see here that you have your symbols, your amount of shares, your average cost, the market price, the cost basis, market value, gains and losses, growth. But this is where we get some really exciting stuff. Now we have the frequency. So how often are they paying? Is it quarterly or is it monthly? and that's denoted by the 4 or the 12. And here we go. Now we have an X date, the record date, and the payment date. This part is absolutely exciting because not only can I look in Robinhood and see my pending dividend transactions, but I can just see them here at a glance on this spreadsheet, and I can see that I have all of these payments coming up in September. And then we can scroll over here and just see which companies that it relates to. We can see that Arbor Realty paid on the 3rd. We have also had Ford that paid. So this is just a really great high level overview of what's going on in our portfolio. And of course, if you're not familiar, the X date is the absolute, basically the deadline for when you have to own a particular company to then receive the dividends. So we can see here that on August 30th, if you wanted to be paid by realty income, that's when you needed to purchase shares of that. Now, the really cool thing, I don't know that Andre covered this in his particular video, but I'm going to cover it here. If you are looking at a particular company and you just want a really quick overview, if you want to say, hey man, I really want to get paid on this particular stock this month, this is what you can do. You can come to this spreadsheet and you can put in the ticker symbol and it'll automatically populate everything. So I'm going to put in here MO, hit enter. We can see here that it is going to load, and then we will get Altria Group. We can see that the market price is $44.28. This is delayed by about 20 minutes, so don't go exactly about what it says. But here's the exciting thing. I can see that the dividend X date is September 13th, which is next week. So if you wanted to get in on Altria, you would then have to buy those shares by September 13th to get the payment for that. So this is super, super handy. I can come in here, and if I wanted to buy Apple, I can see here that the dividend X date is going to be on, or it just passed, August 9th. So again, we can see what's coming up for these companies' X dates, and it just makes it that much of an easier decision if you are currently looking at purchasing a particular stock. This also has a dividend income tab where you can track all of your dividends. You can see here when we started in June, our first dividends $1.28. $6.17, and then we just made this huge jump up to $15.17, about 150% increase in our income. Made a video about that, about how our income increased 100%. Very exciting to see the compounding effect and the dividend reinvesting happening in these portfolios. And then of course, this one is a really good view of the diversification. This gives you a pie chart of where all of your assets are. Very exciting to see this being represented in this way. I know there are plenty of ways that you can see this in M1 Finance or other tools or other spreadsheets, but this again gives me a really nice visual overview of what we're having in our portfolio. We can see here that Washington Prime Group, or WPG, is my largest exposure right now, and we're going to talk a little bit about that and why that is. Now, the overall strategy isn't to keep that portfolio so overbalanced in certain areas, but what I wanted to talk to you about is why we are so heavily invested right now in WPG. Now, please keep in mind, I am not a financial planner or certified financial advisor. All of this is my opinion, and obviously the research that I do that goes into buying these particular stocks. Please don't go out there and just buy stocks because someone on YouTube says they bought a particular stock. I wanted to share with you guys this article on Washington Prime Group and why it's severely misunderstood. I'm going to leave a link to this one in the description, but I do want to give you just a brief overview. A lot of market participants assume that Washington Prime is struggling and low quality and closed mall company. This is a REIT, by the way. I'm absolutely loving the returns that I'm getting on my REITs. So not having to be a real estate investor and go out there and look at all these properties and manage these properties, you can just invest in REITs and get a really good return on them. So the reality is quite different with WPG. The company is more diversified and of higher quality than you think. So if you're interested in doing the due diligence, again, I cannot stress it enough, do the research. Make sure that you're getting into this for the right reasons. You're putting a good amount into this if you're wanting to get into it. WPG was one of my larger dividends this past month, and I continue to reinvest into that. Taking a look at the dividend scorecard on Dividend.com, we can see that they have a 30% yield, $1 annualized payout, which means that they are paying 25 cents every quarter. So for every share that you own, you are getting paid 25 cents. I'm currently at 47 shares, which means every time that they pay, they will be paying me approximately $11. Taking a look at WPG's Dividend Growth over on Seeking Alpha, you can see that they've had a fairly consistent run on their dividend It has not increased, but it also has not decreased in the last 5 years. So I'm looking forward to this particular company. I love investing in real estate REITs and growing month over month with the dividends that I get from them, either reinvesting them directly back into the company or being able to diversify the portfolio and get more quote unquote stable positions. So the strategy that I've been looking at over the last few months is, do I get into a bunch of different positions and spread my money really thin, or do I focus on a number of stocks and then get that to a particular threshold? I put that question out there and I got a really good response from Andre on his video. He talks about his goal of wanting to get $20,000 a year, which then translates to about $1,600 a month, and the overall portfolio value needing to be around $500,000. So again, if you have 100 companies and you want to set a threshold of $1,000 invested in each of those companies equally, that means on a 4% return, you are getting $4,000 a year or $330 a month. So depending on what your goal is for your monthly income or your annual income to get in dividends to live off of, that's how you should be factoring it. So again, if you were invested $500,000 into the market and you were getting a 4% return, that equals $20,000 a year or $1,600 a month. Now you can do a lot with $1,600 a month. You can either reinvest that, or you can pay bills with that, pay your mortgage, pay your rent, whatever you might need for that, or go on a lot of nice vacations. So that's going to do it for this week's update, guys. I really appreciate you stopping by, sticking with me all the way to the end. If you would not mind, please leaving us a thumbs up. And if you like what you hear, like what you see, please consider subscribing. And until next week, do whatever it takes.